What's going on, everybody? Good morning, good afternoon, wherever you are in the world. Today I want to talk about a new holding that I do have for this portfolio, and I'm going to give you guys kind of just my ideas, my thesis behind it. I do cover it in my lives that I do typically Monday to Friday, usually 9 p.m. Eastern Standard Time. So if you want to be on those lives and kind of just listen in, you can hit the notification bell, like and subscribe, and you'll get notified anytime I do go live. I also have a Discord server, so if you're interested in that, the link will be down below in the description, pinned as a comment as well. So real quick, let's just look at the portfolio. So I was hovering at an all-time high of about $80,000, almost close to $80,000, and then we had this, downward trend because of tariff talk, right? Basically, it's more tariffs being placed. I think they've been heightened to about 245%. So obviously the trade war between the United States and China is escalating. So this is obviously having an impact on the US stock market. So you guys have heard me speak about this, about SOXL, right? Mostly SOXL. SOXL is a semiconductor 3x levered share ETF. All right. So this ETF will move in the direction of whatever SOXQ does. So SOXQ is another semiconductor ETF, but SOXL, what it does is it adds on additional leverage, right? Additional leverage. So you can get 3 times the return, but you can also go through 3 times the losses. So I was really bullish on this. I was like, I might as well buy this and hold it long term because, this is at such a great price. It was at $7 at one point, and I didn't pick up any shares at that price, but this has shot up as high as $60. And I was thinking now is a great time to get this because the last time it was at $7 or even $8 was many, many years ago. But as I continued learning about SOXL and leverage ETFs and inverse ETFs and things like that, come to find out that, there is something called time decay or theta decay. So it's not something you want to hold for a long period of time. These are great if you're going to do intraday trading, like maybe you might hold it for a day, a week, but anything longer than that, and you typically start to lose your return, right? It starts to decay due to time. Don't ask me the mechanics or how all of this works because I'm not that versed in it, but it was enough to convince me not to go with SOXL as a long-term holding. All right, so real quick, what are semiconductors? Semiconductors are materials with electrical, I have this thing in the way. Semiconductors are materials with electrical conductivity that falls between conductors like metals and insulators like wood or glass. Typically, these are used in, computer processing units, graphic processing units. You also have, these semiconductors used in watches and phones and all types of electronics, cameras, just everything. They're used in almost everything that we use today. Computers, monitors, keyboards, mice, microphones, lamps, smart lamps, all that stuff. Semiconductors are part of everything these days. So I was thinking, I should just open a position in some type of semiconductor fund because right now we're at this point in time where there's so much uncertainty, and that has reflected in the stock price of a lot of these major semiconductor funds. So SMH is one of the more popular ones. So is SOXQ. We're going to just quickly look at SOXQ, right? So this is the one that SOXL is based off of. And if we just look over the last year, from all-time high, it's down quite a bit, right? It's down 34%, and it was down as low as 30, almost 40%. So this, to me, was attractive. This is a great entry point, to get in, take advantage of some cheap shares, right? And if we look at SMH, which is the VanEck Semiconductor ETF, this one's more of a longer term, has more of a performance history to it. Look at that chart, right? Of course, past performance is not indicative of future returns, of course, but still looking at this, it was doing very, very well. And again, if we look at all-time highs, it's still down about 30%, right? 30%. So this to me, again, is very exciting. This presents a very good opportunity to buy. So, I was looking at this and trying to figure out how can I purchase, a semiconductor ETF and add it to the portfolio. But I have to be careful because the portfolio that I have on Robinhood is primarily income focused. So it doesn't make sense for me to hold something like a VanEck Semiconductor ETF SMH, or even SOXQ, or even SOXL. It just doesn't make sense, because the whole point of the Robinhood portfolio is to make or generate some type of dividend income or cash flow, right? So I discovered CHIPPY, right? I looked at CHIPPY before, and again, I've been a really staunch advocate against investing in Yieldmax funds, because just if you believe in, like NAV erosion is the new flat earth theory. Okay. You're going to have people on both sides say, whether it's real or it's fake or whatever in between, right? I'm of the camp and of the side that I do believe that NAV erosion is a thing, and it's not something I want my portfolio to go through. Now, there is a difference between NAV erosion and share price decline. Okay. Share price decline, you have the greater market declining, right? Everything falls when the greater market declines. So that's just share price, declining. Whereas NAV erosion, they pay out a dividend or a distribution, and your NAV continues to go downward. It continues to trend downward, right? That to me is NAV erosion. Even though the underlier might be doing very well and it might be increasing in value, the ETF itself is still going down in value, right? So that's just one of the common issues that a lot of these synthetic cover call ETFs have. So, when I looked at CHIPPY, I was like, let me just take a look at it. Maybe it might be a product I'd be interested in. And if you guys have a better product out there, I was hoping Roundhill or Curve or maybe Rex would have something similar, but they don't at this moment. And I don't think that they have one in the works for the future. They might. But right now, I wanted to go with CHIPPY because I think it is a great opportunity to get into the semiconductor income space and still be able to get some capital appreciation. So CHIPPY is a Yieldmax Semiconductor Portfolio Option Income ETF, and I'm going to explain why I'm investing into this. But first, I just want to give you guys an overview. So CHIPPY is an actively managed ETF that seeks current income and this is the big one, and capital appreciation via direct investments in a select portfolio of 15 to 30 semiconductor companies. So they actually are not going to just be doing, a synthetic cover calls against these companies. They're actually going to own the underliers, which is a big change for a lot of Yieldmax funds. And not only that, this is a weekly paying ETF. I'm not looking for weekly paying or monthly paying or whatever, group A, B, C, D or whatever. I'm not looking for any of that specifically. It just happened that this ETF pays out weekly dividends, which is really, really nice because it matches up with some of the other ETFs I have that pay weekly from Roundhill. So again, I'm very bullish on NVIDIA. I'm very bullish on semiconductors, and looking at the whole AI thesis, over the long term, over these next 4 years, especially into the next decade, I could see AI playing a huge part in everyday life. And if you drill down just a little bit, you'll find that, semiconductors are going to be right behind them, because in order to have AI companies, you're going to need to have chips and hardware and, computer hardware that can train these AI models, that can, help these AI models operate much faster. So in order to do that, if you look and dig a layer deeper, your semiconductors are going to be right behind chip manufacturers. Companies like NVIDIA, like AMD, companies like Intel. But semiconductors are going to be the next layer down. So the primary objective for CHIPPY is to seek current income. CHIPPY's secondary investment objective is to seek capital appreciation via direct investments in a select portfolio of semiconductor companies. So while I was looking at this, and again, this is a fairly new ETF. It's only been out, a couple of weeks now. It does have a 0.99% expense ratio, much like all Yieldmax ETFs. So again, not a whole lot of performance data behind this, but I was looking at the holdings, and this is really what I cared about the most. And I'll tell you why. Because with all this talk of tariffs and all this talk of trade wars going on and deals having to be reached, and it's going to take at least 90 to 120 days before anything is materialized, I was curious, like, okay, how would this affect the semiconductor space? If I'm going to invest in anything, in any semiconductor company, I want to make sure that these companies are US based, right? That is important for me. So I looked at their actual holdings and just listed out which holdings are from the United States and which are from other countries. And surprise, a lot of these companies are US based. Okay. The only companies that are not US based is ASML. Then you have this company, NXP Semiconductor, and Taiwan Semiconductor, right? TSMC. So there's only 3 companies out of the batch that are outside the United States. The rest are all based in the US. And this plays into an even bigger thing because, the United States is trying to basically halt China's, AI growth, and they're trying to basically stem it from overtaking the United States' artificial intelligence dominance. So I wanted to invest in companies based in the United States because I don't want to bet against the United States. So I made sure that a lot of these companies were US based, and they were, which is awesome. So I decided to open a position in CHIPPY at something very small, nothing too great. So I invested into CHIPPY, and right here are the buy orders. Yes. So April 14th, basically, have 80 shares valued at about $37, maybe $3,800. So nothing too extravagant there, but I would like to get this to about a $10,000 investment. So over the next couple of weeks or the next month or so, I'll be putting more money into CHIPPY until I get about to $10,000. Again, I think right now is a great opportunity to buy, the semiconductor space because of everything going on. Now, can this drop lower? Absolutely. I bought this at all-time high, 47.50, I think is the cost basis I opened at, or 47.32, and it's already went down, right? Down in value, which is a total kick in the butt. But I'm still very bullish on semiconductors and the semiconductor sector, especially, again, when you look at this whole play on AI, deregulation of AI, and all the money being sunk into artificial intelligence infrastructure. I really do think that semiconductors will play a big role in all of this. So I don't want to bet against that. I'd rather put my money where the administration, where the government is putting their money and deregulating. So that's why I decided to go with something like CHIPPY. If a better ETF comes out from another provider, I'll take a look at it, and I may just sell out of this and go with them. But I am pretty hopeful that this Yieldmax probably turned a leaf, and maybe this one will perform the way it should, which is capital appreciation and dividend income. So obviously we still have a lot of risk in the space. This just came out not too long ago, but U.S. tariffs may cost chip equipment makers more than $1 billion. There's all this talk about tariffs, all this talk about trade wars. How long will they last? What's the impact to companies? It's hard for companies to forecast. It's hard for companies to make moves because they don't know what the U.S. administration is going to do. So yes, there is a lot of uncertainty. There's a lot of fear. There's a lot of, scariness and chaos in the markets. But, when there's chaos in the markets, there's opportunity. When there's volatility, there's opportunity. All right. And, I'm always reminded of this quote from Warren Buffett: be fearful when others are greedy, and greedy when others are fearful. Now, we are at all-time high for fearful. Okay. A lot of investors are scared right now to put any type of money into the stock market. And it's reflected obviously in the massive sell-offs that we've had, right? Just over the last, month, we've had a huge sell-off in the semiconductor space. And if we look at the S&P 500, we've had an even, greater drop. We were close to a 20% decline for the S&P 500. So I think right now is a great opportunity to buy when shares are declined, right? When shares have huge share price declines, right now is an opportunity to pick up cheaper shares, for a good price. So that is why I decided to open this position in CHIPPY. I'm very bullish on it. It does pay out weekly, and it did just announce a distribution of 36 cents for every share. So I will be making about $28 on this ETF for this week. So we'll see how this continues to go over the next couple of weeks. But if you're a big believer in tech, and you're a big believer in artificial intelligence and the bull case for the artificial intelligence thesis, or the industry as a whole, then you will definitely want to consider some type of exposure to semiconductors, right? Not just AI companies like Microsoft, Apple, NVIDIA, or you have who else out there? Google. There's going to be all these other plays that you can look at under the hood. So that is why I'm going with CHIPPY, the Yieldmax Semiconductor Portfolio Option Income ETF. I think this should have some legs. Of course, we don't know yet. It's still a very brand new ETF. And, I'm going to just monitor over the next couple of weeks, couple of months, and see how it performs. I'm hoping that they do get the current income piece nailed, but also the share price appreciation, the capital appreciation, right? I don't want my money being eroded to basically zero. There's a lot of funds from Yieldmax that have gone that way. And yes, there is that thought out there that, you can get your whole return on investment within a year, maybe 2 years, and then the rest is considered quote unquote free money. But I'm not a believer of that. That is not how I like to invest. And when I hear the train of thought that investing in these ETFs is like investing in a rental property, I scoff, because I do invest in rental properties and this is nothing like that. All right. So with all that being said, I hope you guys got some type of value from this. I hope you guys understand kind of this whole semiconductor piece and why I'm investing into it. And I hope you enjoyed the video. Remember to like, subscribe if you're not. And of course, if you want to join in on the Discord, a link down below in the description. All right, guys, I will see you in the next video.